I'm sure you're wondering, how can your money be protected? Let me talk to the experts now. Joining me now in studio is Ahmed Mohamud. He's the CEO KDIC, which is the Kenya Deposit Insurance Corporation. He'll tell us about that in just a bit and what their mandate really is. Thank you so much for making time for us.
Thank you, Trevor.
So let's get straight into it. We know when I talk about Kenya Deposit Insurance Corporation, people are wondering, okay, so what is their role exactly? Just give us a brief overview.
Thank you, Trevor. Kenya Deposit Insurance Corporation, popularly known as KDIC.
Yeah.
It's not KI, it's KDIC.
KDIC. Yeah. And
KDIC, deposit insurance basically is there to protect the small, unsophisticated and vulnerable depositors. That is the cardinal principle of a deposit insurance.
Yeah.
It's to protect the Wanjikos, the Atienos and the Fatumas, very hard-working Kenyans who toil for them to save for a rainy day.
Yeah.
So deposit insurance comes to protect that savings of theirs in the bank, to ensure that their businesses are not disrupted and their savings are not disrupted. So deposit insurance basically provides what we call a deposit insurance. So we insure the deposits of our people. Two, we also provide what we call incentives on risk management to banks. That is why we work very closely with our membership, our banks and financial and microfinances, licensed and regulated by the central bank. And indeed, we are working with them to make sure that they also reinforce their risk management framework. That today we have now introduced what we call a risk-based premium. I'll speak to the risk-based premium later. The third mandate of the deposit insurance is what is known by almost all Kenyans, is to promptly resolve in the unlikely event of a bank failing. Today, if there's a problem with any bank, the only authority which has the powers to resolve that bank is KDIC. We have a toolbox, we call it the toolbox, the toolkit, to fix any problem in any bank. And that is where KDIC today is, because KDIC before used to be Deposit Protection Fund, which was a department in Central Bank, and it was only known for closing banks. But KDIC is not there to close banks. KDIC is there to resolve banks, because going forward, one of our mantra is no bank failure in Kenya, or no bank closure in Kenya. So that is the future that we're all working towards. To make sure that we move into a bank, resolve the problem of that bank, and let that bank continue as a going concern. So basically, those are the three mandates of the deposit insurance.
You sound to me like you're really more on the side of the people, trying to ensure that they are protected. So what has been the gains like in the recent past? Have you managed to do this?
Good. The gains in the recent past is that if we take the example of Chase Bank. Chase Bank was one of our good case study. Chase Bank was actually a beneficiary of the new KDIC Act, the KDI Act, where we applied one of our resolution option of carving out part of its assets and liabilities, transferring to a more solvent bank, which is SBM, and the depositors were able to access up to 75% of their deposits, beside the other payments we have made. So in total, depositors were able to access over 80% of their deposits within a period of 3 years, which, unlike what used to happen before with the DPF, where we have institutions which have been with us for the last 30 years, and so far we have paid an average of about 25%. And of course, you will say Chase Bank will be slightly different, because if you look at the old institutions, we came from what we call, those are legacy, they had legacy challenges, where the prudential guidelines were not very strong, where the supervisory role was not very strong. But after 90, Central Bank to actually up its game, and now introduced more stringent regulations and all that, so that banks at least now adhere and comply with those regulations. So today we can say one of the benefits is that the depositors have managed to get 80% of their deposits within a period of 4 years. But going forward, we want to work that they should get their not only get their deposit, they should continue doing business with their bank, because we're not telling them just go to the bank and remove the money. We're telling them the bank is now in business, go into your bank and continue conducting business with your bank. So that is the message that we want to put to the depositors, that there will be least disruption in the business of their banks.
Okay, so anyone who's watching you this morning is probably wondering, how then do I know that my bank is safe?
Good. All our banks are safe. Today, if you walk to any of the bank, please, and make sure you must cite our stickers. We have put stickers in all the banks. These are some of the new developments we have brought in, which tells you that this bank is a member of Kenya Deposit Insurance Corporation. Of course, we have Central Bank, which has the supervisory authority, which actually are the ones who are inspecting the banks. But so far, one thing we can assure Kenyans, all our banks are safe. So we cannot say that there are banks which are, all our banks are, we call them sound and strong and robust. So please, we ask Kenyans to continue trading with our banks. And that's why even as KDIC, we are running a campaign saying pesa zako ziko safe kwa bank. We've been running this campaign for the last 6 months. And actually that is a way of now telling people, don't keep your money under the mattress, because under the mattress, there will be the two R's which will attack your money. That is the rat and the robber. So please put your money in licensed and regulated banks where you'll see the KDIC stickers, and then just go back and know that your money is safe, because for now KDIC is proactively working with the banks, particularly on the risk management, because problem of banks normally comes from the risk side. So you must have heard me talking of our second mandate is to provide incentives. We are providing incentives to the bank. Like Trevor before, the premium which we charge as a deposit insurance was flat rate. But from July this year, we have introduced what we call risk-based premium, where now banks will be charged in accordance with their risk profile. The higher the risk, the higher the premium. And of course, you'll have to, the management has to explain to their shareholders and the board why are they being charged a higher premium. So this will now be an incentive to the bank management to ensure that they also, and this is a word I like using, to jealously guard and invest. Because whatever they're investing is deposits. And Trevor, for your information, banks, as much as they're private, they're holding a public asset called deposits. Banks, actually, the shareholders only own 10% of the bank. The 90% of the bank is owned by the depositors. That is why deposit insurance is specifically and with a laser-guided decision-making system, we are addressing that mama mboga who is putting her money in the bank. You'll even see some of our infomercials. You'll see us talking to Mama Mboga, the borders. Those are the people who will actually bring in the investment into this country. That is the money which we need to bring into the banking system so they can now be used for investment purposes to grow our economy.
And those who are watching you right now probably wondering, so what should be the recourse in case my bank is going under? Where do I start? Do I come to you directly? What happens now?
Good. That is why I want to use, Trevor, the word in the unlikely event, God forbid, that a bank closes. Of course, we'll be advising people on what to do. You saw, like even Chase Bank, Imperial, we have been advising people, that come for your money. If you look at Imperial and Chase Bank, we used a new model which has never been used before. We allowed depositors to access their money while still under receivership. And we managed to fully pay about 93% of the depositors. For your information, Trevor, and 97% of our people have 100,000 shillings and below in this country. That's why traditionally the coverage was at 100,000, but this coverage is only payable when an institution is in liquidation. And liquidation, I normally like calling it the last mile of resolution. Actually, it's a byproduct of resolution. It's when now you want now to completely close this bank. So last year, we increased for the first time that payout, that coverage, from 100,000 to 500,000 shillings. And Trevor, for your information, 500,000 now we are covering 99% of the depositors. So in the unlikely event of a bank today being put in liquidation by the central bank and KDIC appointed as a liquidator, which is one of our roles, we will pay we will pay 99% of the depositors of that bank, which is 500,000 and below. So we want to tell Kenyans, sleep knowing that your banks are strong, and that is why we are working around the clock, and that's where we have brought in KDIC, which is actually a successor of DPF, which had a limited mandate, brought in KDIC with an expanded mandate called risk minimizer.
Yeah.
Our oxygen we breathe is risk management. And that is why we are calling ourselves a risk minimizer and a resolution authority.
All right. You've mentioned the Pesa Zako Ziko Safe Kwa Bank campaign that we're talking about. So a depositor wants to bring in their money into the bank. How then do I ensure that they're part of the KDIC? You've mentioned that I can see the stickers, but should I demand for some paperwork first, or do I talk to my relationship manager? How do I ensure that they are part of you? Good.
All our members who are licensed and regulated banks and microfinances are members statutorily by law. They are members of the Kenya Deposit Insurance Corporation. So they cannot get a license without coming to Kenya Deposit Insurance Corporation. And if you look at their boards, you will see there a sticker showing that this bank is actually a member of. Beside the sticker, we also give them a kind of a certificate, annual certificate. We do it annually. We give them a certificate which will be displayed. So we have made it easier for our members that when they walk into any bank today, look at any till there, or the tellers, you will see a sticker there telling you this bank is a member of KDIC. However, by law, statutorily, any bank which is operating in this country today, licensed and regulated by the central bank, is statutorily a member of Kenya Deposit Insurance Corporation.
Yeah.
So we are asking our people today through this forum to please continue transacting business with banks which are licensed and regulated by the Central Bank of Kenya. Where you see any name with a bank, make sure you walk in there. If you see that sticker, Trevor, ujue umefika nyumbani. Your money, yes, your money is safe.
Ujue pesa ziko safe.
Pesa zako ziko safe kwa your bank.
All right. So a quick one here as we wind up on this conversation. So compare the times when you do those operations before the KDI Act. How has it impacted your operations after its enactment?
Oh, it has impacted massively, Trevor. Trevor, for your information, you know, and KDIC is a member of the International Association of Deposit Insurance, and I sit in that board. And indeed, currently, I'm the chairman and the president of the African region. I'm in charge of the whole African region, deposit insurance. And one thing that, in 2016, we were rated the best deposit insurance in the world. And one thing that made us be regarded as the best deposit insurance in the world is our law, which is the KDI Act. And please, Trevor, after this, just go to our website. It's a very simple law. Just read it. That law is aligned to the international best practice.
Yeah.
Before we moved from DPF to KDIC, we subjected DPF to a kind of an assessment by international expert, where I was also involved, because I'm the only one now from Africa who can an assessor of deposit insurance. We assessed and we saw the 5 main loopholes that can take the DPF to the next level.
Yeah.
One of it was autonomy. That's why we started KDIC. 2 is to have its own law, which is the KDI Act. 3 is to play the role of a resolution authority. 4 is to expand its mandate from that limited mandate of being a liquidator to being a risk minimizer. Okay? And then the 5th is now to play its effective role as a safety net participant in this country. Today, when you talk of resolution of bank, the only corporation which has those powers is KDIC. What kind, just quickly, what kind of developments have we brought in? I talked about we have reviewed our coverage from 100,000 to 500,000 for the first time for the last 30 years. We have introduced risk-based premium.
Yeah.
We have introduced stickers in the banks. And now going forward, indeed, we are looking for now a consultant. We are coming up with what we are calling the living will. Banks are going to submit the wills like your will today. They will submit their living wills with KDIC so that we know where their assets are, where their liabilities are, where everything is. So that in the unlikely event of a closure, we say now, where are these assets and where are these liabilities. And one of our role is to look at how are these banks, we are working very closely with the central bank and the National Treasury to make sure that we look at how are these deposits being invested. Because one area that normally makes banks fail is what you call the credit risk, how they lend money, because the bank is an intermediary between the saver and the borrower. I'm a saver, Trevor wants to own a studio, so we'll come to the bank. So we want to see, when Trevor was given this money, were all requirements met? Are the securities there? How are these securities? How? Because Trevor, that money does not belong to the bank. That money belongs to Wanjiku, whom we are protecting. So these are all the things that we want to bring in this country, so that even the membership, even the banks themselves will now become more and kind of, they will really look into their risk management, so that we are not telling them don't do business. Do business, but make sure even you, because if a bank fails, it's not only affecting the Wanjikos, it's also affecting the workers of that bank and the owners of the bank. So we are all in this together. So we must work together and make sure our banks don't fail, so that we can also attract foreign investments into our country. Because one of the things today any investor will look at is, does that country have a resolution authority? So that one is one tick. So in Kenya today we have that tick. And we only have 2 resolution authorities in Africa. It's ourselves and Nigeria. South Africa is just starting their deposit insurance now. Actually, we are assisting them. Ghana started last year. Uganda too are now trying now to move from central bank to start its own deposit insurance. So even in the whole world today, the best practice is we must have a robust deposit insurance in the systems.
All right.
Yes.
And finally, you know, we are all looking up to you to lead this institution. What is that picture of success? What would you like to achieve at the end of it all, that when you now hang your boots, you're like, I am happy to have been the CEO of the Kenya Deposit Insurance Corporation? Yeah,
my dream has always been to transition from where it was to where it is today. And I want my legacy to leave a robust deposit insurance, where we are putting systems in place and where we have brought a kind of stability in the financial sector. My dream will be to see no bank failure in Kenya. Actually, that will be the most beautiful dream that I will ever have. Even when I retire, when maybe I'm herding my camel there, I can also keep my small money in the bank, knowing that my money is also safe in that bank.
All right.
Yes.
Thank you so much for making time for us this morning. Mahmoud Ahmed Mohamud is the CEO, KDIC, Kenya Deposit Insurance Corporation. He says, pesa zako ziko safe kwa bank, all right? So avoid the 2 R's. You say the rats and the robbers. All right. That's what we take.